and you see the size relative to wave 3, you can prove that wave 1 is longer than wave 3, which means wave 5 has to be shorter than wave 3, which gives you a maximum retracement for wave 5. Okay, that's important. It's important for trading. It's important just, for charting. And this is how you can use that principle to your advantage. If you ever see wave 3 being shorter than wave 1, then you know wave 5's maximum retracement. So the max wave 5 can be is retrace to, or not retrace to, but extend to is 30,949 on this chart. Okay, and remember, all charts are going to be a little different. All different exchanges are going to be a little different. Now, let's zoom back out on the daily time frame. Let's get rid of this and talk about what happens after. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 23rd, 2022, and Bitcoin is looking stagnant in this complex fourth wave correction. It seems to me that we have one more small leg down before reversal, okay? And once again, if you're new to the channel, welcome. This is my analysis very quickly. I'm seeing this drop from the top of 64K as an A wave. I'm seeing this whole, so-called bull run from May 2021 all the way to October 2021 to the 69K top as a big B wave. It's a zigzag, right? It's an ABC. If you know anything about Elliott wave theory, it's 535 correction, 535 correction. It's correcting up because the initial correction is down, so it's counter to the initial correction, so it goes up. It's impulsive, but it's not a 5-wave impulse per se, right? So that's why people are kind of getting vibes of, well, it's kind of like a bull run. We experience gains, but there's no blow off top like a typical bull run, right? And the blow off top they're referring to is that ending diagonal in wave 5. Anyway, that's a B wave, and this is our C wave, our impulse down, okay? And those of you who are new to Elliott wave theory, understand that this is wave 1 of 5, all right? And this isn't even the worst of it. This is a regular wave 1. It wasn't extended or anything. It's just a regular wave 1. So those people that think the pain is over are need to really, really think hard and look at charts, because if they thought this was bad, after we do our 2-wave correction, they're going to absolutely hate or just leave the space entirely for wave 3 and then wave 5, okay? So again, this is just the beginning. So the move, my play is to seek to exit positions on this 2-wave, okay? And I've been waiting for this 2-wave for quite some time. After I saw this analysis, I thought, okay, I need to get out at the 2-wave, not only for my long-term holds, but also just change my mindset when I'm trading, knowing that I'm trading in a macro downtrend, okay? And so this is what it looks like. This is what it feels like. So anyway, so that's the large term kind of analysis, the high time frame. So I need a little bit more for this 5-wave structure, this 1 wave, to be complete in my estimation. And one of the telltale signs is whenever price is stagnant, you know that it's most likely in a complex correction. That's what complex corrections do. 80% of the time, I believe that. Well, just my general kind of estimated experience says that 80% of the time price is in these corrections, and then the other small percentage, 20%, it's actually in a motive phase, so moving, right, in a wave that's actually showing some price action. So that's how I know we're likely in that complex 4 correction. And once we finish it, we get our final wave down. All right, and let's zoom in really quickly to see more definition and see what exactly this complex wave 4 looks like. Again, this is a smaller degree. We're talking about, here, let's go on an hourly. So this is the wave 5 by my count. 1, 2, 3, 4. This was a long complex 4th wave correction, and you typically get complex 4th wave corrections after relatively simplified 2-wave corrections by the law of alternation. Okay, so understand that when I'm talking about the complex 4th wave correction, this is for this wave. Okay, this is wave 5 of 5 of 5. It's a 3rd degree, meaning, we're getting smaller and smaller and smaller. It's all fractal. Okay, so that's basically what I'm seeing. Zoom in to the 15-minute time frame to see even more detail. And the beautiful thing about Elliott wave theory is it's fractal, right? There's no time frame sort of preference. Obviously, it helps to do analysis on larger time frames just to get good context, but you can go into the smaller time frames, no problem. Don't let anybody tell you that going into smaller time frames is any less professional. Making good entries is all about going into smaller time frames, in my estimation. Okay, that's how I do it, and I do this for a living. So top of 1 is here, okay? And this is a valid 2-wave correction. You just touched the 236. I said this yesterday. Now, this 3rd wave is the smaller wave, okay? And we'll prove this in just a moment. And this is significant because one of the rules in Elliott wave theory is that wave 3 cannot be the shortest wave. It doesn't have to be the longest, but it cannot be the shortest. Again, that wave 4 is still valid. Do you see? We're respecting the 382 fib retracement, right? It's wicking above, and that's okay, but we haven't violated this 382. So this still, to me, is a nice wave 4, and we can get even more specific. This is a complex correction of the WXY variety. So here is where you can count complex corrections, and they give you a bit of insight as to what is going on. For those of you who don't know anything about complex corrections, I welcome you just to look it up. So WXY. We can also do a WXYXZ, which would make it even last even longer. But if we turn around and do a bit of a flat pivot into wave 5, we should get something like that. Okay, so that's what I'm seeing. We still have a little time, and this hopefully, where will it end? I anticipate that this will come to using the 1618. I know this doesn't always work. It doesn't work when you have an extended wave 5 or extended wave rather. But more often than not, this 1618 gives you your target for your wave 5. So I'm expecting the target to be 32,633, okay? If we don't get an extension. You can even target the 1236, but usually you target the 1618. That's where I expect Bitcoin to come for this extended or this last wave 5. And after that, okay, let me just one point before I get ahead of myself, before I go into what happened after that in my estimation. Okay, you need to, so one of the rules I mentioned in Elliott wave theory is that, and let me put the count on this really quickly, is that you cannot have wave 3 be the shortest wave, okay? So that's, nope, let me do that again. Let me turn the magnet off. All right, so this is 1 right here. This is 2. This is 3. This is 4, and then 5, 32, 6, whatever I said. Okay, so that's what I'm seeing. Now, why is it important to understand the Elliott wave theory or principle that you cannot have wave 3 as the shortest wave? It's because if you measure, and let's actually make that a different color. Okay, if you measure wave 1, turn the magnet back on, measure wave 1, and you see the size relative to wave 3, you can prove that wave 1 is longer than wave 3, which means wave 5 has to be shorter than wave 3, which gives you a maximum retracement for wave 5. Okay, that's important. It's important for trading. It's important just, for charting. And this is how you can use that principle to your advantage. If you ever see wave 3 being shorter than wave 1, then you know wave 5's maximum retracement. So the max wave 5 can be is retrace to, or not retrace to, but extend to, is 30,949 on this chart. Okay, and remember, all charts are going to be a little different. All different exchanges are going to be a little different. Now, let's zoom back out on the daily time frame. Let's get rid of this and talk about what happens after. Okay, and I just scroll through crypto Twitter from time to time, just because it's part of my Twitter timeline. I use Twitter, and I'm not posting much, but I'm usually just absorbing, taking in jokes and stuff like that. It's entertaining. A lot of people are saying, we're going to get a big consolidation, something that takes months and months, just like we got back in May. Okay, this is going to be a months-long sort of process before we get any upside. Okay, and this is not accurate, because this consolidation was in preparation for this B wave. Okay, whatever happens down here is literally just going to prepare for a reaction rally, right? A 2 wave. We're looking for a wave 2. And the first thing I'll say is, even here in this B wave, you saw that you got a quick, so the second you got capitulation, and here's your capitulation candle, basically your final candle to the downside. That day even, okay, and let's go on the smaller time frames to prove this. Go on the 4-hourly time frame. That day even, okay, and that day was December 3rd, 2021. You got a 20% reaction to the upside. Sorry. Let me turn the magnet off because this is kind of hard. You got a 27% reaction to the upside, like immediately, within within 3 days. Okay, within 16 hours, you got a 22%. Within 1 day or less than a day, within 16, 20 hours, you got a 20% reaction to the upside. Okay, so expect a big reaction, nevertheless. Okay, expect a big reaction. Sorry, I was just looking at something completely different. Let me do that again. I apologize. So yeah, 19th of May, 2021. Am I even looking? Yeah, 19th of May, 2021 is that capitulation candle. And right after, you got a 43% reaction within the day. Okay, a 43% reaction, so 45% even. And look at what happened. You have 5 waves here, right? 2, 3, 4, 5. Okay, you have 5 waves here. Where did, I'm going to turn that white, where did the price react to in that A wave? It reacted and gave you a bounce into the region of the 4th wave. Okay, and this is what I'm saying. You will get a reaction to the 4th wave of the larger degree, meaning if you see a 4th wave down, A is going to come into that region. Maybe it goes to the bottom of that region, maybe it hits the 0.5618 of that region, maybe it breaches that region, but you're going to come to that region. So price is going to target that, okay? So if we go back to where we're at now on the hourly time frame, okay, we see that we're likely, very likely, to, at the very, very least, come up here to this 4th wave right there, because this is 1, 2, 3, 4, 5, right? This is wave 4 of this reaction. But because if you zoom out, you see that we are actually completing a larger wave down, right? A larger, like this is the completion, not just of this wave, but of this larger 5-wave structure. I anticipate the reaction to come all the way here in this region between the 41 and the 52K region. And again, it can come to the bottom of that, which would be around this wave 4. It could be in the middle of that between the 0.5 and the 618, or breach the top of that. So that's what I expect. I expect at the very least a bounce to a 29% bounce, or we can get a 63% bounce in an A wave, okay, within the coming hours. So those people that say, you're just gonna hit the bottom and just hang out, you have time to make entries. Maybe you do have time to make entries, but if this A wave gives you 20 to 60%, it might take some time before coming back down and then going up again. So this is why it's important not to miss this bottom, right? I've been dollar cost averaging into my long position, assuming that this indeed is the final leg down, okay? So that's what I'm looking at. That's my take. I hope this was helpful. I hope this was useful. Looking just laterally at the rest of the market, you see some green. Things are ready to go, but nothing's exploded yet, right? Everything's kind of still in that 4th wave, waiting for that last drop, it seems. Just looking, it looks like everything's in a 4th wave. Router protocol is a bit different. And that's been a bit different for some time, but it seems like pretty much everything is in that wave 4, looking for just one more leg down before a reversal. So that's my analysis. Hope this was helpful. Hope this was useful. Please like the video for other people to see it, for the YouTube algorithm to make it more conspicuous. There's not that much pure analysis, right? When we're talking about technical analysis, a lot of people like to bring in fundamental analysis, which is fine, but this is pure technical analysis. I don't give a damn what the Fed is saying, what the SPX is doing. I'm just looking straight at the Bitcoin chart and taking insights from that. So if you appreciate that, like the video, share, subscribe, and I'll see you guys tomorrow. Bye.